Good morning. Today is October the 18th. The time right now is 8:20 in the morning, and we can see that the U.S. equity market did not react very much overnight, despite very strong economic numbers released. Last night we have the release of the U.S. retail sales number. Market was expecting 0.3 increase for the month of September. It came in a very strong 0.7, so that effectively doubled, more than doubled what the market was expecting. So that should technically cause the market to rally. We also have the release of industrial production numbers. Market was expecting no change for the month of September. However, it came in with an increase of 0.3. Like I say, those two numbers should technically cause equity prices to rally, but we don't see that overnight. The Dow Jones only increased by 0.2% overnight at the close, whereas the Nasdaq and the S&P 500 closed actually marginally lower. So technically what I will see here is that a market rebound from 32,846.9. This is creating a possibility of a three-wave rally into this bracket of prices shaded in red here, somewhere around 34,500 to 34,750 levels. So do watch out for an extended rally into this bracket of prices, perhaps even into testing the 34,800 to 35,000 levels. So this actually does give the market some momentum to trade to the upside based on economic number release, suggesting US economy is very resilient right now. And in the S&P 500, like I said earlier on, the market did not close at the on a positive note. In fact, it closed marginally lower at down 0.1. But before the market does that, the market actually has a rally into 4,393.5, which is an improvement since the market bottomed out at 4,216.5. So this does give the market the possibility of an extended rally, in my opinion, to something higher beyond what we have seen so far. I do suggest there is this possibility of the market going even higher than what we see so far, with the possibility of the market actually going beyond 4,442. Sorry, this is 4,442. So basically, I do expect this possibility of a three-wave extension into 4,480 to 4,520 level. So there is this possibility market may challenge this level here at 4,541 over time. So let's see what happens going forward. But I do suggest the momentum going forward should actually be in favor of further upside in US equity markets. In the Nasdaq 100, we can see that the rally that we see from the bottom here, that we see about last week or the week before last, okay, at 14,432, has lost some bit of a momentum. Market right now is stuck between the 15,000 levels. So we can say the market is struggling, but however, based on momentum that we see in the other two equity markets, that should be able to give this Nasdaq here a little bit more room to the upside, perhaps even going beyond 15,333 that we have seen so far. Nearest resistant areas likely to be centered around 15,456 to 15,512. And over in Hong Kong, we can see that prices continues to stay in consolidation. We have seen the market pull back from 18,392, and it has stalled above the 17,600 levels. So right now it is basically in trading waters situation. Market likewise is actually favoring the upside because US equity market seems to be firmer. So if this is the case, we possibly could see an extended rally in the Hang Seng going forward. And if this is the case, I think there's a good chance somewhere around the 18,000 or even the 19,000 levels is still a possibility. So if this actually ends up in a three-wave rally, the 19,000 here will actually be challenged one more time. Okay, over in the Nikkei 225, similar, we see that the market has been very strong, and the rally from 30,300 looks like it may actually extend higher going forward. The low so far is 31,560, and if we take this to its logical conclusion, a challenge of 34,000 seems to be in the cut. So do watch out for further rises in Nikkei 225. Based on what we see so far, technically speaking. Over in the dollar, we can see dollar has stalled, okay, but however, the dollar has also stopped falling. The rally back to 106.56 in the dollar index came down last night to register a week low so far at 105.99. So this is basically telling us the market may actually be going higher in a three-way rally, perhaps to re-challenge the 107.05 levels that we've seen last week. So this is the technical outlook. Downside, I think the market should continue to drift. There's a possibility market may test 105 half levels, but by and large, I think we should be still long dollar based on what we have seen so far. Over in the principal currency, we can see the euro dollar attempt to rally. Yesterday, we did have a attempt to a high of 105.95 levels, and this is suggesting that perhaps they have enough momentum to go up to challenge 106.20 to 106.40 levels before it comes back down to test out this low here that we saw. Okay, now this low here, let me see where is that low here. The low is 104.48. Okay, so do watch out for market to go up a little bit before it comes back down. That's in line with the strong dollar scenario here. And over in sterling, same thing. The market seems to have stabilized at 120, 120. That leaves the possibility of market either going up or down, because right now it's right in the middle of between these two possibilities. Top side, best estimates about 123. Downside is 120 to 120.80. Okay. Over in the Aussie, you can see the Aussie is also stuck between two layers of prices. On the upside, we have 0.64. On the bottom side, we have 0.63. Currently, market is at 0.6360 levels. So it could go either way, but again, trading is likely to be confined within these two barriers of prices, 0.64 to the upside and 0.63 to the downside. And over in dollar yen, market is still very cautious, but you can see the market has been testing the water and wanting to go higher. Without the fear of intervention, I think this market would have gone much higher than where it is currently trading. Overnight, we have a test of 149.85 level, which is the best we have seen so far. Although there was a mysterious dip to 148.74 overnight before the market decided it is best to trade to the upside. However, right now, based on technical, we can see that the first layer of resistance to any higher prices is going to be contained between 149.85 to 150.16, which is the high here traded on October the 4th. So we want to see how market reacts, but I think by and large, market like I said, if without the fear of intervention, it would have gone much higher. Okay, and dollar Canadian is stronger, and we can see that the market right now is kept between the 136.70 to 137 levels. This is definitely a layer of prices that which is seen a lot of heavy selling. So for the time being, the market is likely to trade between these two layers until it break out of either range. At the top side, 1.37, and the bottom side 1.35 half to 1.36. So do watch out for levels, these two levels to cap the trading of the euro dollar versus Canadian. Now over in the crude oil prices, we can see crude oil actually has stabilized, and overnight we have a low traded at $85.60, and I think market wants to go higher in view of the escalating tension that we see in the Middle East. And we have latest news that President Biden is visiting Israel to show support. That means that if he can play the role of a elderly statesman to de-escalate the situation, then crude oil prices may have a chance to come back off. However, if there is no action that leads to a de-escalation in the Middle East, we could soon see crude oil prices trading northward of $95 per barrel. Over in the gold market, we can see gold market continues to buy the story that there's going to be a de-escalation. In fact, prices has dipped back into 1,907 before. Now it's trading back up again, currently trading at 1,925. Okay, that was the last call to buy between 1,905 to 1,913. So for those who have not bought, maybe the prices may not come back again in view of the Israelis military laying the ground for a ground assault into Gaza. So if that actually pans out to be the case, then I think gold prices could be trading a lot higher than what we have seen so far, beyond $1,932.90. So the immediate level based on technical rally here, the area to watch out will be 1,943 to 1,955 levels. So this is a crucial level. If the market do break out of this level and close beyond this level, there is no turning back for precious metals. Over in silver, silver has actually registered a marginal high at $23.01 overnight, and based on what we see likely to be the case, the momentum is going to carry silver prices back into $23.60. So do watch out for that possibility here. Okay, and over in Bitcoin, we can see Bitcoin actually, after a mysterious rally to 30,127, has now fallen back to register a low of what, 28,000 thereabout, and currently trading about $28,450. But by and large, this rally here was actually based on a false report that's saying that iShare, which is part of the BlackRock ETF, is has gotten approval from the SEC, and of course, both BlackRock and SEC denied that report, and the price come back down. But you can see that it did not unwind everything that we can see so far. The market is likely to stay above 28,000 for the time being. Currently, it's trading at $28,430. But I think technically it should lay the foundation for further price escalation in the days and perhaps weeks and months ahead. So do watch out for higher prices in this digital space here, because everything else seems to be falling apart elsewhere. So do watch out for this. In the meantime, this is all I have for you, and you take care, and I'll come back to you tomorrow with another update. Bye-bye.